Our next guest has been a longtime friend of the show, also a media expert who's been with us through thick and thin. So it is fitting that he is here to help us celebrate our 30 years on air. We talk about the markets as well. Billionaire and value investor Mario Gabelli. He's the chairman and CEO of Gamco Investors. And Mario, truly, you are somebody who predates me on this show. You've been here as a longtime guest host, and we are very glad to have you with us today.
I've been very privileged to be on the show for that long. Add up your years, it's like 65 years for the three of you together. So
I thought you were joking when you said that. I actually did the math.
It is what it is.
When was your first appearance? You were on with Heinz, right?
Yeah, way back.
Yeah, back in the day.
About
like
the same time you started, 1995. But you were at FNN for a while.
That was 1990 when I got back. I was at FNN prior to that. Yeah.
Nobody counts. It is what it is.
I don't want to count. I know.
Just think about the fact that I've lived through 8 recessions.
At FNN when I was 11.
Never a doubt about that part.
Mario, let's talk about where the markets are at this point. We'll talk broadly, and I know that you're more of a bottoms-up guy, but just broadly speaking, how difficult is it to find bargains as a value investor?
No, because what's happened is that there's a divergence to large-cap stocks. So when we look at small, they're beautiful. And to the degree that we see financial engineering at work, that helps in terms of transactions and takeovers. Today, for example, you had a bunch of deals announced already. And so from that point of view, M&A, financial engineering, spin-offs, and looking at pieces. For example, we had a company called Telephone and Data Systems. It was languishing at $10 or $12. They decided to monetize an asset called U.S. Cellular, now called Adage. And basically, you can see the amount of money. The stock has gone substantially. Take SATS, Charlie Ergen's company. Stock was languishing at 26, 7, 8. Today it's probably 84 bid. So there's always something going on.
Because of the sale
and
of
then you take a company like Zimmer that does body parts. And basically they spun off a company called Zimvi in the dental market. And you're buying it at 10, 12. And it's now 19 as takeover. And then you had a simple company, Kellogg. Right. They split up into two parts. Kellanova is being taken over. And the company, Kellogg itself, the cereal company, is being taken over. So there's always some type of dynamic that's taking place.
Okay, let me talk about financial engineering that is not being looked at kindly by majority shareholder, and that would be Warren Buffett and Berkshire Hathaway with what's happening with Kraft Heinz right now. The company came and is announcing the spinoff that they're going to do, and Buffett made the very unusual move of being an investor he's always a passive investor, but he made the unusual move of saying he's disappointed in this move and he doesn't think it'll work. Do you?
Well, from his point of view, he's already liquefying. Yeah. He's spinning off public companies. He's got a significant amount of cash. And so what is he going to do with that? What is he waiting for? Is he waiting for another cycle, or is he just looking for the bargains? And work in progress.
So do you have any views on Kraft Heinz, on whether you would be a buyer?
Kraft Heinz? Yeah, we think the stock is around 26.7, and basically the split-up pieces can be worth as high as in the mid-30s. So
you like the financial engineering?
It's not. We don't like or dislike. We're just observing it. We own it. We didn't buy any recently. We're thinking about doing that. We're having an internal challenge and debate with our teammates. So we'll probably be more of a buyer of the pieces.
Let me talk to you about Monumental Sports and Entertainment. We just had Ted Leonsis here on set.
I listened to it.
Okay, I wanted to get your takeaway on this because they are making moves that will set them up eventually for an IPO, potentially, if the conditions are right. What do you think about the thesis he laid out?
Well, from the point of view of visibility and advertising, they are absolutely center row. NFL, you can own a piece of it. For example, even the New York Giants are selling a piece of it. So from that point of view, what we like is the following. Madison Square Garden Sports. Okay, MSGS has got 24 million shares, 5.5 million owned by the Dolans. At $200, it's $4.8 billion. Are they going to move the center? What are they going to do? Are they going to take the theater and reallocate it? But think about Dolan. Jimmy Dolan spun off a bunch of companies, MSG Networks, MSG, the Sphere. Right. The Wizard of Oz is propelling the stock. you know.
People thought the Sphere was going to be.
I'm not saying which one is Scarecrow and Tin Man, but So those are the kinds of things that we look at. Obviously, you know, you guys were kind enough to sign this, okay, baseball. But the answer is not complicated. Betting has also been proliferating since the Professional and Amateur Sports Professional Act was passed by the Supreme Court, and that opened up a new genre. So those are the dynamics. The next part is focusing on soccer.
But wait a second. What about Ted Leonsis' group? You were saying front and center is MSG. What do you think of Ted Leonsis and the play that he's making, which is, look, we like sports. We like being the arena. It looks like they're kind of following what MSG is doing. Are you a fan of a potential company like that would come on market? Yeah,
I'm not opposed to it. I haven't read the details. Okay?
Well, they're not even going public.
You know, like Bally's out, and they're building a theater, a park for the team that's moving there to Las Vegas. Just think of the transformation of Las Vegas as an example. Football, hockey, baseball. So those dynamics occur.
And with gambling getting wrapped into it, does that make it more attractive?
Well, it's an element, okay? I always worry about the gambling part of the business, but, you know, Nevada and Las Vegas have the culture and have the regulations in place for an extended period of time. So I'm less concerned about that market than some other dynamics. And regional sports betting and iGaming and so on, they're taking control of a lot of that. So the part of the Strip, the northern part, is having challenges. So those are what we think about. And, for example, you have individuals like that are taking on Pepsi-Cola. Then you have that same entity buying $1 billion worth of Genuine Parts. Genuine Parts is 140 million shares, and it's selling at 139. It's got a nice dividend, $8 of earnings this year, which are lackluster, but they have 7 pieces, $25 billion of revenues. And they're basically going to look at perhaps financial engineering. Will they split off their industrial products business called Motive, and that's Motion, which is about $9 billion of their $25 billion of revenues. And they will have auto parts, and they compete with O'Reilly's, AutoZone, and several other companies like Advance. And so why are they doing it? Why are they gathering information? Why are they arraying it, putting it together, and taking that approach? And what do they expect to happen out of Genuine Parts? Well managed, with some short-term dynamics that are negative. So but they'll overcome those.